Hello, folks. Welcome to another edition of Market Action. Dave Russell here. Good to be back. And, just so you know, some people have had issues with sound related to one of the recent Mac upgrades. Not sure, but did want to just let people know that that has been an issue. Some people said, don't upgrade to the whatever that is. But anyway, market just squeezing higher here. And it's very interesting that for several days we had looked for the pullback to 2145, and we haven't gotten it. And I tend to think at this point that a lot of people are of the mind, well, 2145, 2160, I don't care. I just want to own this thing because the market's going to go up. And there's a lot of cash on the sidelines, and I think that it makes sense to look for a breakout because, wait a little bit more, because if you look here, there is, let me see, take a look here at the S&P, the minis. There was basically, this is squeezing into a pretty serious triangle here. And, waiting for a breakout is probably, a clear thing to do. The problem is the breakout might not happen during the trading session. I tend to think it's going to happen today. I think there's a good chance of it, but that's more of just like me kind of being probabilistic and being intuitive as opposed to anything really systematic. This is just squeezing very tight. When you look at the calendar, tomorrow, it's not really clear what would cause the breakout, and then we have Yellen on Thursday. This is just, I tend to think we're probably going to, accelerate higher, and I think we want to watch this. But I think if we get through the top of this range, which is about 5 to 10 points higher in the S&P, you could see this really accelerate. So I did want to point that out. The level I'm saying here is on the SPY. If we get through 217.5, that's really the level that I think you're going to see, some real buyers stepping in. We had identified the high coming in at the resistance at basically 217.38, and today's highs were right around 217, I think 45 or so. So I think we clear that level. That's going to be, you're going to see money flooding in. The options paper today is, the most interesting thing about it is, and Mikey pointed this out, so I wanted to do a special little report mention of it. There are 4 very large trades in the ETFs. I think we can actually take a look over on Research Lab. Let's take a look here at the options activity on Research Lab. And this will allow us to actually see some of these. But there's big call buying in the XLF way out in March. Let's go here to our ETF, and we can say the 3 calls were bought in massive size in XLF. There's also call buying in EEM, the $36 calls in EEM, expiring the 2nd of December. XLK has a very large put spread. Let's take a look here at XLK. Let's jump over, click on the put button. And actually, first I'll mention USO first. USO has the April 10 puts right here. These were sold against open interest, and they were rolled down. So someone with protection in USO. Don't forget, of course, this evening we do have our the API oil inventories after the closing bell, and then tomorrow morning we're going to have the EIA oil inventories at 10:30 a.m. Eastern Time. Those are obviously impacts, potential catalysts for oil. On top of that, the Research Lab calendar here, it also has, it doesn't show yet, but at the end of the month on the 30th, we have that OPEC meeting. Now, yesterday oil did rally. Halima Croft, she's an analyst at RBC. She's been very bullish. She keeps saying that OPEC's going to, actually pull off a production cut. I don't know. I have been more on the bearish side of things. I kind of feel like maybe that they do get a production cut, it'll be like everyone's going to pump as much oil as they can and then cut from there. I'm not sure how that's bullish, but for now, oil is holding this level, and it seems like it wants to be in this range between 43 and 52. So, just in this range right here. So wanted to mention that big trade. Let's go back here to Research Lab. USO has that put roll, and then XLK has a put spread as well. You can see this put spread here. Wait a second, XLK, the January 43 puts and the 40 puts. These 2 things in XLK. This is the vertical spread. So these are some very large, trades that you can see on Research Lab. just noteworthy because they're in big, well-known ETFs, and then we did want to mention those. The first alert we today was in JetBlue, JBLU. Um, Warren Buffett came out, bought some airline stocks. These are November 20 calls. We said, hey, these are close to the money. We waited for the stock to pull back before we did the alert. We did the alert, and the stock was somewhere down around here. Got a little bit of a bounce in it. Look, these November 20 calls are going to be tricky to play with expiration so close. But still, I think it's interesting. We've been bullish on this stock for a while. We have been recommending it when it was down around 17 or 16. It had that nice bullish engulfing candle about 4 months ago. Right there, we marked it in late September. And we were long, between 16 and 18. I haven't looked at it since, but the company has some good traffic numbers recently. So JetBlue, I think, is nice here. November 20 calls. Well, let me be not nice here, but it's interesting to see the paper. We thought it was nice when it came back under 20. Quick little move like that. This has been a sector that has been obviously bullish. Transport's very strong overall. And then the airlines just are an area that I think a lot of people, they loved them years ago. They had a rough, for most of the year in 2016, it's been a pretty bad year for the airlines, but then they've been kind of clawing back. So combined with the Buffett news and everything else, it's kind of interesting. I think they're a little bit overbought when you look at some of these other ones. Qualcomm had some call buying. They're buying the June 70 calls. Company is buying NXP Semiconductor. And also Franklin Resources, the old, mutual fund giant, or maybe not giant, but this company used to be like the best in breed many years ago. They're buying, actually, wait, I didn't get this. Let me just do one thing here. We'll go to our activity log, and where is it? By the way, folks, we have a few other changes. We continue to make little improvements in our service. I want to tell you about that, but first let me take a look here at Ben. In Ben, it was the 45 calls in April bought. I like this because, you're basically looking at a company that has had, some good earnings, horrendous news priced in for a long time. I mean, obviously, mutual funds have been in a bad place, but you're looking at companies now that, say we really are in another bull market. Say this bull market has a second leg when it goes from being, when it reaches Main Street. A lot of people have not been in this market. And, I think we're entering a period that could be somewhat like the 1980s of housing and economic growth. And, and the thing I've been saying all along is that there are no excesses in the economy. There's good employment, and people are still acting like it's like 1934. And I think that as things go to a sense of normalcy, and I've been seeing increasing numbers of strategists kind of, saying similar things, and people saying, we have the opportunity here for higher interest rates to goose the economy and things like that. A company like Franklin Resources is the kind of company that, like, if we get back into that more kind of optimistic mode, people are going to see a company like this as being bullish. The other thing is they do have some, apparently they have some cash overseas, so this company could benefit from the whole repatriation thing. So I did want to mention this. Franklin Resources, April, 45 calls bought. There's a 5-year chart of the stock coming off some long-term lows. I like the way it's making these higher lows along here. And, I'm not sure it goes straight up. It probably doesn't. But I think there's a good chance that by April this stock could easily be, well into the mid-40s, and those calls could work pretty well. Here's another interesting one. Tiffany, one of you guys cited it on the activity log, and then we on the chat, and we put it on the activity log. Earnings in this one are the end of the month, and the 78.83 bullish call spread expiring on the 2nd of December. So earnings in this one are like the very end of November, the 29th, and then they basically, by doing this vertical, we can see here on our implied volatility constellation, you can see that higher implied volatility right there as they're targeting that month with that expiration for earnings. And they are buying the 78s and selling the 83s, just looking for a rally through that event. The thing I didn't like about, this has got all these weird little strikes. The thing I didn't like about alerting this is that because it's a spread, it really might not work very well before earnings. It could just kind of, even if the stock moves higher, you might not really get a good return. I'm going to restart my platform. It's acting strange. 1 second, folks. But it's interesting to see that move in Tiffany. This stock, is something of a turnaround play, and let me just here we go. Something of a turnaround play, and retail. I'll tell you, I was just like 2 weeks early in retail. I was trying to buy some of these retail stocks. It didn't work super well. But, if you look at this 6-month chart of TIFF, I mean, it looks pretty nice to me. So I'm not sure what to do with it, but this company has had improving results recently. Take a look over here in Research Lab at TIF. Pretty sure the last earnings report was good in this name. And let's see, earnings. Wait a second, earnings, sorry. Revenue miss, but earnings beat. That was back on the 25th of August. Look at that gap higher. You can see right there. So, by the way, let me show you some of the changes we've done in the Research Lab. You guys will notice we now have a little thumb up and thumb down. It doesn't dawn on you, unless you are colorblind, but there are some people who are colorblind, and they said, oh, yeah, are those dots that we had on Research Lab, are those supposed to be colored? And they didn't know, because some people didn't actually know that those dots were red or they were green. So we've changed those to thumbs, red and green, thumb up, thumb down, to show you some stuff. One of the other things we've done is we have now added to our premium service. What we've done is we've separated out the groups and sectors section of our morning strategy note, and we basically go through and we discuss. I do a lot of things when I've found ways. I've always been based on sentiment. I'm looking at the big sector sentiment. I'm looking for the areas that are doing well in the market. I have a lot of tools to do that, and Research Lab is one of the ones that I use, that I look at a lot. Every morning I look at Research Lab. I look at the sectors. I look at the indexes. I look at the countries. I look at the groups. I look at the 1 month, 2 month. I look at all these different things, and I kind of try to put together a summary of where the strength has been. So every day I've been kind of burying that in the S&P strategy note. Now we're starting to publish it as a separate standalone alert. So every morning you guys are going to be able to see that. So just so you know, that is something we're going to have going forward. Where is Apple going? Well, I still think Apple is one just to avoid. I've been saying 100 I think is a really likely level on this name. It does have that 200-day moving average coming around. This could be pretty close to a level when maybe this is where it holds. I don't want to be too bearish on it. I mean, right now, if the S&P rallies, we could definitely see some relative strength activity in a name like Apple. This could be I haven't seen any evidence here that it's really at a good buy level. I haven't seen any evidence that it's the momentum is necessarily turning more positive in it. But I also think that this stock, I think it's going to probably bounce a little bit more from here, and I think there's a good chance you're going to get it closer to 100. So I'll tell you, I don't want to be too bearish on it. We were right that it went down to 110 and held, and then 106. I don't want to push my luck on it, though. I mean, this company is, this is a blue chip stock, and it's pretty oversold. I think it's going to bounce from here, but I'm not really sure that it has turned yet. And I think this company, I'll be honest, I think they face some bigger issues, and that is Google has a new phone that's supposed to be pretty awesome that I think is, I think Apple has had a kind of unfair advantage because Google's Android, kind of like do-it-yourself OEM model, I think, was a really dumb idea. And I think finally, Alphabet figured that out, that it's a good idea to control your product as opposed to letting everyone else do it. And I don't know. I'm long-term really kind of wary of Apple here because I think Tim Cook's a bad CEO. I think he very clearly showed that he doesn't have much of a clue about innovation when he came out with that watch. I know I've been really rough on him on it, but that was his opportunity to come out and basically put his name on something and take credit for something, and he came up with a really bad idea. So, I think he's now a very questionable CEO, and it's an innovation company that seems to be not really winning the innovation war. So I think Apple here has a lot of downside. I think it still has a risk of bleeding lower. Nonetheless, um, there's a good chance here that it's going to get defended at the 200-day and have something of a bounce. So that's what I think about Apple. What solar? I don't understand. What at solar company? I don't understand what you're asking about solar. What do I think about TIF? I think TIF is one to actually play with stock and let it go. And I think right now you have a pretty good entry if you look at the shares. The thing I say about the options is like, if this stock doesn't jump to like, 83, even if it does, that call spread isn't going to work right away. So I think this is a problematic one with the options. That's one of the reasons we did not do an alert on it. I think just you can buy the shares right here and sell them before earnings. I think this is a beautiful pullback, and I think this is probably just one to play with shares or something that's way simpler, like there's got a lot of, these are pretty tight. I would say maybe something like right around here, the 77s or 78s, and look for a bounce in the stock. But I don't like the spread at all as a strategy. I mean, it's a pure binary thing, and I think this stock has a great entry. I think right now you want to be long Delta. You don't want to be just betting. You want to look for the rally into earnings and then exit before earnings, in my opinion. First, solar. Well, I think that the solar stocks are just all going to zero. This is just, I'll tell you, these guys are just totally bad stocks. There's a lot of things Trump's going to do to stimulate the economy, but I don't think putting solar panels on rooftops is one of them. And this is an industry that I think is just a disaster, and I think they're all going to keep going lower. So I don't see any reason why you'd want to. There might be one or two that have very specific stories, but this stock run, even this, I think these are just all avoid. I think you're talking about a seriously damaged sector. Am I still bearish on LAD? Well, I don't like what they've. I don't want to overly press it. I at the time I was not impressed by some of the things they had done. I'm not going to just repeat that. We did say the break lower, and now it's come back kind of to where it was. On this one, I'm gonna just kind of I'm gonna pass on this. I don't want to say something that without researching it. EEM, is it still going to 32? Yeah, I think so. I don't see anything here that is particularly bullish, and I'm not really a big believer in oil. So I think you could easily see a small rebound in energy for a couple of days. It could go back to 36 EEM. But I think we're seeing a clear shift away from global. And I'll tell you, if you look at some of this stuff happening in Europe, I think you got to realize a lot of the rally in EEM was because of impeaching Rousseff in Brazil. That was a huge part of it. Another part of it's energy. And, I don't think we're going to see a big rally in oil. It might not go like to 20. It might not be terribly bearish, but I don't think it's got a whole lot of upside at this point in time. So for me, I don't see any reason to own EEM. And when you look at the international situation, this thing in Korea, I don't know much about it, but it doesn't look good. And then if you look also at, there's a whole bunch of things that are just not great internationally. You're going to have this vote in Italy, not very far off. And then, next year, the French elections. I know it's not an emerging market, but I think right now people are focused domestic. Interest rates are going to go higher. And I think that the dollar is still, pretty strong here, and I don't think emerging markets are really the place to be. Speaking of interest rates, I do want to mention one of the things I want to point out here is, so I'm thinking, all right, how far do interest rates go? Because I'll tell you, I'm thinking like, hey, do I want to put like, because I'm not just going to religiously never buy bonds. I'm thinking, do I want to put my 401k into a bond fund? Just for the sake of it. And I'm saying, where would I do? I'm not saying to do that. I'm saying, where would I do that? And I found my level, I think, which is basically the levels of mid-2015. So go to the TYX here in the Options House platform. There's a composite index of the 30-year yield, it looks basically at just the long-term yield. It's an index. It's not a tradable product. There's no options on it. But if we take a look back here to July of 2015, this implies roughly, a 3.25 interest rate on the 30-year bond. I think at that point we can be buying bonds. On the 10-year, it's going to be a similar peak. Also, I think in that case we're looking at a high around 2.59 or something, right up around this level on on the 10-year. So this thing, you just move the decimal point one to the left, and that's the yield. But anyway, I think at this point, up. But there is going to be a point when I'm going to be like, you know what, bonds are too cheap, and I think just from a they're going to move, but we're not there yet. So I'm trying to identify these levels. Like you guys know, I was going through and I was looking at this. This morning in my strategy note, we go through and we have this this section we call it long-term views, and we basically try to identify things that are happening or going to be happening. But some of these things we've identified really have panned out. I mean, we were calling the turn in bond yields back in August. We were talking about the weakening of the yen as being a long-term bullish thing, and I'm trying to identify things long-term because the thing is, if you don't anticipate, then when you get there, you'll screw it up. That's what I have found. I'm trying to find things that are interesting that I feel that make sense to me. And, my conviction about interest rates was one of the reasons why we were always saying that, just keep rolling to those higher calls in the banks, and I think it worked. So at this point in time, when you get a move like this in interest rates, you also have to say, okay, at what point do we get it out of it? So I think right now with banks, I think same thing. When yields reach those levels from 2015, that's going to be the top for banks for the time being, and that's going to be so. Just want to point that out. That would be the time to start actually thinking about being long, bonds, and we're not there yet. Here's an interesting one. Stanley Toolworks, holding right above this 120 level. This looks kind of interesting to me. SWK. I'm just watching my other screen. I did want to identify this kind of one of these Trump stocks that had good earnings and stuff as well. It's a cyclical, it's an industrial, it's an infrastructure play, all that sort of thing. Stanley Black & Decker. There's a bullish combination trade today in Five Below, FIVE. They're selling the $39 puts and buying the $41 calls. So it's pretty close to the money. It's just a bullish synthetic play. Earnings are on the first, so this is basically going to go through earnings. So you got to be really careful. They're naked short puts into earnings, which is, you just got to know what you're doing for something like that. Obviously, being naked short puts into earnings, if the stock has a bad earnings report, you can be very underwater very fast. But this is another way to basically say, hey, outside of this range, I'm a buyer below a certain level or above a certain level, and then you just let it go, and you don't have to overly manage the position. All right, let me take a look at some more of your questions. Adobe, is it time to purchase long or short-term options in ADBE? Have liked this stock. I think this one here is probably, wow, this is a nice pullback. I think this one here, I think just a standard December's would make sense because you're going to have earnings protecting your premium, and then you're also going to have you're going to have earnings protect your premium. I'm pretty sure this company has had the last earnings. I mean, it has historically been an excellent name. Earnings and revenue beat. Yeah, I would say something like the December, and I would just look for the ones that have a good gamma. The 105s. I think the 105s are the way to go. The December 105 calls in Adobe. that's going to give you the real bang for your buck. I want to mention here a couple of things that are interesting because I am noticing some software stocks that are kind of interesting. Adobe was not on my list, but I do like it. Microsoft here, this is a name that, we've seen this pattern on many charts before. 50-day moving average, and it holds the old highs. I think it's a bullish pattern, and let me put this back where I found it. These old highs right around 58. Actually, if you look, we have a line here. And the 50-day moving average. I think Microsoft here is at a point where I don't think it's going to go down much more. I would say this is one where, kind of a window dressing name, something like the January calls or the February calls would be, in my opinion, a way to play this. Probably something like the January 60s. I'm not sure exactly the best way, but I did want to just mention technically when you look at it here, I think there's a level where it might chop around a little bit more, but I think this is going to be something that it's going to be pretty bullish. Another name I think is in really good shape is Red Hat. It's been a great stock, and I think it's just getting ready to rally. Another one here's one. Now this stock, is a really volatile name. I think the folks at Investors.com are big fans of it. I've been a big fan of Paycom software for a while. I haven't looked at it for a while. We were bullish on it back in the beginning of the year, back in like February, I know. And the last earnings report was it was just okay, but this is a great company. I think when you look at it, it's done a pretty good job of their growth story. And I think it's one of these companies that was just shares fall despite good earnings and guidance and everything else. But you see this with growth stocks. And in my opinion, this is buying growth stocks after these events is almost always a good idea. When they have good news and be like, you know what, screw it. It's too expensive, and they just sell it. But then after all that passes, and now we're talking, that was 2 weeks ago. And now we're talking about a stock that's holding, some decent levels around 40. We've got some support here, right around 40. And the 200-day moving average, it's not going to go straight up. But I think, you want a stock that in 3 to 6 months could be higher. This is a bona fide growth stock. And they also have, it's not been what people have wanted. It's capital it's human, it's like HR software and stuff. But it's a growth stock. And I know it hasn't been the flavor in the market right now. They've gotten really slammed on the Trump thing. And but I think when you're looking around, this is one of those companies that is going to do well with a good economy. And, these secular growth stocks are not going to be just thrown out forever. And I think when you consider the fact that this thing fell before the election based on earnings, and it's pretty much held in there despite all this other bloodletting in the NASDAQ. So this stock is probably going to chop around for a week or two more, dig down, maybe hit 40, chop around. But it's going to turn, and I like this name. So I wanted to mention that. Another one that I think is going to have a good end to the year is ServiceNow, is another cloud computing stock that, let's see this. This one here, gapped higher in good earnings, pulled back, held support. This chart is just perfect. So these are interesting ones as well. I want to mention something else. The real estate investment trusts have been just a disaster in the last few weeks. This is, no wait, not AMH. AMH is one that we had an alert for inside options for Option Monster Premium maybe a month or two ago, and it's just kind of held in there. This is a REIT that has not fallen at all. This company owns, I think it's something like 250,000 houses or something. 250. It's a big number of houses. No, 25,000 houses. I think it's something like that. But they just own a big chunk of these actual properties. And the nice thing about this is yeah, it's a real estate investment trust. The dividend yield though is only about 1%. This is not like your typical dividend play. This is like buying the Case-Shiller index, in my opinion, because these guys are not going to just sit on these houses. They're going to sell them, and the market is going to value this stock based on the real value of its houses. I think we're about to see an explosion of value in houses because the thing is everyone's been sitting and waiting. We've been seeing the activity pick up because of interest rates moving higher. It's really interesting. Mikey and I have been watching this, and we were talking about it, and it's like when interest rates went down, the home builders went down. Now that interest rates are going up, the home builders are going up. It's not what you would expect, but I do think that this is what, and you guys might remember a year and a half, 2 years ago, I was like ranting about how the Fed needs to raise interest rates. And I was always a believer that it would stimulate the economy. Well, I think the market actually believes that, and I think they agree with me on that now. And I think that what we're going to see here is, we are going to see the housing market, get moving. It's like a stock that needs that one like sell off and then it explodes higher, like Grubhub did like 5 months ago. Had good earnings, no one cared. Had that slam lower, and you think, oh, it's going to die, and then it doubles. I kind of feel that that's where housing is right now, where everyone is just like refusing to buy a house, and then they realize, you know what, I missed the bus, and it's pulling out of the station, and I got to get on board now. I think home prices are going to start to take off. Now, this is less of a stock market thing and more of a societal/economic thing, but I do think it's true. This stock could be the one that is actually viewed by the market as the single best way to play for house appreciation, because they own just these single family houses. So I want to keep that on people's radar. The thing to me that's most impressive about this stock is the fact that it just didn't move. I mean, look at the other REITs, XLRE, the other real estate investment trusts, just really beaten down recently. A lot of these other REITs have been terrible, and this stock just kind of holding its ground. So I think this is one that has the potential to do something interesting, and I think we want to keep it on our radar. If this thing goes much above 21 and 3/4, that's where I've got some price alerts set to see if it breaks out of this range. But I think this is interesting here. I think I see basically something. Look at this. See, we have a bullish triangle forming in AMH. See? So it's broken the downtrend, and it's starting to form a little uptrend here. So I do like American Homes for rent. Should we buy puts in EWZ? I don't think so. I think that, I think you could see it chop a little bit higher. I don't think it's a great idea to be bearish right now on the market, on anything. So I think, I'm not sure. I mean, I'm not a big fan of it, but I'm not sure it's a short either. Do I have any plan? I'm not sure what you're asking about. Morgan Stanley and Goldman Sachs, both of them. These stocks are just overbought. These are probably going to nudge their way up to that late 2015 high. MS probably going to nudge up to 41 and then stop. I think MS. I think you're going to see this stock basically just nudge up. And this is the sort of thing where if you get short-term weakness, see, I think this is interesting. And I think we had said this. Let's take a look at Bank of America, because just yesterday I remember, see, this didn't even pull back to 19 like I thought it might. But, I mean, MS is an example of get that 3-day chart, draw your levels, and put your limit orders or your contingent orders on the options, because you're going to find the levels, and you got to be ready when the market opens to be anticipating them. This stock, I think, is going to keep going to 41 because, you have to be ready with these when they're in these fast, cranking higher sort of moves. But I think MS here, these are the entries in it. A name like Goldman is probably similar. The other thing I think to remember is that these guys are going to, I have a feeling that these guys are going to somehow make money from this rally in bonds. I mean, or this crash in bonds. And, I mean, you got to think the volatility and other things. I don't know. I'm not an expert in how they make money on trading, but I tend to think that this increased activity is going to be a boon for them. So, that's something else to bear in mind. And, they probably are going to have, some regulatory benefit. I think GS here, I don't know if this is at resistance. Let's see. No, this is going to go to 220. I think it's not 220. It's going to go to 218.77. I think. So I think 219 on GS. I think you have a pretty good shot of it there. What do I think about BAX? Am I saying to buy it now or wait for a retest of 45? Let's see. Yeah, I think just let it retest 45. if you can get it down there. Not quite 45. Look for the low right around 45 or 45.20. That would be my level on this. Now we did identify this level. I'm pretty sure if you look here on the market action QA bank, I'm pretty sure we had that level on backs. We were saying to wait for that, and we did get it yesterday right at the close. 42 is the next potential level here, but I think 45 it's bounced at that, and yeah, I think it'll be quick. It'll be like at the opening bell, it'll drop down to like 45.20 and then snap back. This at this point is going to drop down. You want to be ready to fish it at support because it could easily, fall back down to the bottom of that range. At this point, I'm not saying to short it here, but at this point, it's probably going to drop back down to 45.20. I'm still overweight FANG stocks. I don't want to get out at the lows. Where are they going long and short term? Well, I think that long term they're going to struggle. I don't think that they're going to go straight down. I think you are going to get a little bit of bounce out of them. But I think that they're not going to end the year well. And, when the market does pull back, I think that they could get, hit pretty hard. So I think right now just sell into the strength. I would say Facebook, look at this consolidation. And the one thing I point out is if you look at the NASDAQ, there was a really clear bearish engulfing candle. What I think we're going to see is I think we're going to see the S&P probably rally from here, and I don't think we're going to see NASDAQ go through this candle. I think we're going to see the strength in the Dow. We're going to see the strength in the transports. We're going to see a strength in the small caps and the S&P and the financials, and I think that the NASDAQ's going to get left behind. And I think when we go back and retrace that engulfing candle, that's really your where you want to bail on these large cap tech names. Somewhere in this candle. And if you look at this candle, which was on the 10th, I think you're going to see that all those different companies like Facebook or Amazon, they're all going to have intraday levels within that candle that I think you can kind of use as a guide stick. So I'd say in a name like, see, Amazon, this is the candle. I'd say like 760, that's probably, Amazon doesn't go much above that level. Maybe 770. Maybe it stabs up to this low from the 9th at 2 p.m. around 763. Maybe that's what it does. See, that was a little bit of an intraday low kind of in that afternoon session. But that's what I would do. I would look to that candle last Thursday and not expect much to go above that. So solar, I said I think solars are all just in deep trouble. I don't think you want to touch them. We had a counter trend move in them about a month ago, and I know some of you guys played them. They did work pretty well, but Domino's Pizza was the point of solar is I think that they're just really bearish and they're going to all just keep going down. Domino's looks pretty good to me here. I would think that you might get it again closer to that 50-day moving average. I think you're going to get some kind of little retest in this. Maybe not a whole lot lower, but I would think here, this stock I think you could get back around 156, somewhere around here. I don't think it's going to go straight up from here. I think you're going to get a slam lower. So I think maybe if this gets down to 156, it's a buy. How much upside does Coca-Cola have? The reason I mentioned Coca-Cola is because with the options, you can make a lot of money from a small move. I think you can go up. When I mentioned it yesterday, I said that was going to go to I think 42, maybe 42 and a half. I'd be surprised if it goes much above like 43. Consumer staple stock, I don't think it's a very good company. Just because, the shrinking volumes and everything else. But it's a Dow member. It's oversold. It's got a really good level at 41, and it's got good options liquidity. So you put all that together, and you can have a bounce in it pretty nice. So I think it can go up, kind of up toward 42, maybe a little bit over it. Let's take a look at the 10-day chart with hourly candles. Interesting, this. I think it's going to go back and retrace a little bit more of this candle. So a little bit over 42 in Coca-Cola. Do I see FXY going lower? Oh, yeah, absolutely. Yeah, the yen is done. And we've been talking about this for a while. I think this is one of the reasons why we have really been leaning more on the bullish side of the market here. Let's take a look at this. Is this is just something I use for currencies. Something called yeah, here I have dollar yen. I mean, look at this thing. The key thing is look at the long-term chart of dollar yen here. Let's hide all these drawings. You know, we had talked about this basing pattern, and the other thing to remember with the yen is you don't want to look at it. I mean, first of all, look at this. See this low, and then the higher low here, and then the higher low, inverse head and shoulders. Now, in our strategy note, we've been citing for several months now the bottoming of the yen, but we don't look at just now. Remember, this is the opposite of FXY in terms of up down. Euro yen is even more important. Euro yen has bottomed. Aussie dollar yen has been bottoming, and I got to say, you know, the Reserve Bank of Australia last night did have you know, a kind of comment about you know, kind of saying they're not going to cut rates again. Now, obviously, I think U.S. dollar is a strong thing, but copper and steel have been going higher. You know, the Aussie dollar tends to follow those. The FXA, there's also futures on the Aussie dollar. I don't know. This to me looks like it's near a level where this is a risk-on currency. Don't forget that. So I mean, I think this could be something here where it's interesting to look at the Aussie dollar, maybe the Australian ETF as well. That one doesn't look as good. But I just think it's interesting that the Aussie dollar here, I think we could see Aussie dollar move higher against the dollar, and you could see Freeport, you could see U.S. Steel, you could see Century Aluminum, you could see all those stocks just start cranking. So I think right now, nice pullback we have in some of these metal stocks, but I don't think it's done. And I think that the next move could come from an upside in the Aussie dollar. So it's important to watch the Aussie dollar. We look at it a lot, and I also think it's interesting when you see it the way it's rounded out here against the yen. I mean, this thing has been falling for like a long time. Let's look at weekly candles. I mean, this thing is coming off a long-term low that goes back to like, you know, 2012. So I think all these things point to yen going down in value, currency pairs going up against the yen, and all that being something that is bullish for equities. And you know, FXY, you know, we've been talking about this for a while. I had this bullish triangle breakdown, and it's been, you know, this is a big deal. This is a huge big deal, and it's good for the S&P. Qualcomm, I like Qualcomm. We did the alert on it. You know, it's not been the greatest sector technology, but this company's held up really well. And because they're buying NXPI, I think they've got a pretty clear catalyst out there. So I think this one is in good shape, holding the 50-day moving average here. I think this is a good buy right here. Facebook, I do not really like. I think, you know, with Facebook, you're going to get small chops and moves, but I don't think it's a good stock right now. You know, I don't think it's going to go much over 120. There's a short-term call roll in Micron. The November 18 calls were rolled up to the 25th of November. Mikey just told me about that. Interesting. That looks pretty bullish. That one looks like it's probably worth an alert because, you know, this one is, I mean, this is just a nice basing pattern. They're giving it a little bit more time to perform. The 25th of November, I like this. These 18s were bought, and then these 18s were sold. Again, you know, the bloodletting in tech is not going to continue with the same ferocity. I do think that we are seeing a real shift in sentiment. And I don't think we're going to see NASDAQ be strong for a while. You know, I think that there, you know, the higher interest, the combination of the political issues and the higher interest rates, and I mean, because you know the whole thing of Amazon and Facebook, you know, Trump doesn't like them or whatever. That's one issue. But then the other thing is these are high multiple stocks. These are secular growth stocks. And like I said, when you're in a period of cyclical growth, people are going to buy industrials. They're going to buy consumer staples, discretionary. The financials. These are not companies that you want to be owning. High multiple stocks, generally you don't want to own when interest rates go up because they're going to be based, these do better. They have, a high earnings yield, which is the opposite of PE ratio. So like companies with high PE ratios typically do bad when interest rates go spiking higher because it means that essentially that their earnings yield needs to go up, which means their price has to go down. The earnings yield is the opposite of the PE ratio. It's something I used to use a lot in the fixed income world. All right, PTC. What do I think about buying options in PTC? Well, I don't think it trades a whole lot of options, and I would tend to be wary of a company that doesn't trade a lot of options. Let's take a look over here on Research Lab. See the average daily option volume on PTC. Can kind of give you a little bit of a guide. And by the way, folks, we're about to be unveiling a whole bunch of cool new options analysis. Some of you guys have been asking about it, and we're going to unveil a lot very soon. PTC. Average option volume 2,300. That's not so bad. I don't even know what this company is though. Earnings are in January. This is the kind of stock that could actually just run into year end. I would almost think that if you have a good thesis in it, I would tend to think that you can buy like the January 50 calls. Right. Because I don't know what's going on with this company, but I have a feeling that there's one of these companies that there's something brewing. There's something about their story that's really bullish. It's not as clear as, you'd have to dig in to find a little bit. But this looks like a company that could have a window dressing into year end. It's a new name that people want to say that, hey, I own this the whole time and all that. So I think this stock could accelerate into year end. And I think something like the Jan 50 calls, the benefit of them, and now the problem is, this stock could pull back to 44, 45, and then rally. So, it's at the top of its range. Buying the $50 calls, you'd have a little bit, you'd have the, not the most delta, and you'd also have basically, it looks like that's the highest strike they have. So, that's what I would say, but I wouldn't do it myself because I don't like buying things at resistance. But if you think it's going to break out, this stock looks like it could sprint in the year end. I think those Jan 50s would also peg the earnings, and you'd have that time value as protection. Under Armour, don't like it. It's another high multiple, quasi-growth stock. It's probably going to have a small bounce, but I don't think it's worth the risk. This is one of these companies that they could cut guidance again. There is a support level here. And, it probably is going to have a stab up to 37. No, not 37. 35 or 36, I think you're going to see. Around here. I don't think it'll fill the gap all the way, though. So, yeah, I think you're going to get a shot up to 35, 34 and a half. And then it's going to just die. Should I write cover calls against my Wells Fargo? No, I don't think so. I think it's going to go to 56. So I think you're in good shape on this one. What do I think about Nuance Communications? Interesting. Don't know what's been happening with it. Got a good support here at 14. It's rallying off long-term support, but I don't know right now. I would tend to think if you do want to own it, I don't know what the news has been, but I would think if you want to own it, it's going to, it's overbought here. It's not going to go straight up, in my opinion. You've got this big ugly candle on the 9th of August that it's going to contend with. It's going to chop back around, I think, and I think you're going to get a retest of at least the October high around 14.5. Well, I'm running out of time, folks. I'm sorry I got to go. Actually, yeah, I got to jump. Hope everyone has a great and profitable and a train day. Now, we're not going to market action the rest of the week. I'm sorry, but I'm going out to Vegas. Hope I'll see some of you guys there. We'll still be doing the strategy note because I got some time to do it tomorrow morning before I fly. Please, if you want to be added to my list, email me at david.russell@optionmonster.com. We'll be back on market action next week, but we will be doing strategy notes in the meantime. Have a great day, folks.